Well, in recent weeks, we've been talking a lot about the story of investing in Canada. We've given a lot of attention to a high-profile letter that was signed by nearly 100 Canadian CEOs calling on our pension funds to invest more here at home. We have heard from some pension representatives who, in some cases, have pushed back on that narrative, the suggestion being that they don't necessarily want Ottawa calling the shots on how they invest, especially if they're trying to make the best investment decisions for Canadians going forward. I want to continue the conversation now with Mark Wiseman, former chair of AIMCo, former CPPIB CEO as well. This one's getting a lot of attention. We talk a lot about it. I think it sort of helps to get back to what you talked about before. Everybody's very curious about where the money is going to flow from into the Canadian economy over the long term. How do you feel about this idea of pension fund money being more focused on Canada?
Well, look, I'd love to see more pension fund money focused on Canada. First of all, there's already a lot. Hundreds of billions of dollars of pension money are invested in Canada, far more than sort of what most portfolios would suggest there ought to be from a diversification point of view. But if you want more capital invested in Canada, we shouldn't just be focused on what the Canadian pensions will put in. We should be focused on how to attract investors writ large from around the world. How do we do that? We make Canada more competitive. We make Canada a place that's more predictable when investment capital comes into the country. We make it a country that innovates and grows. Those are the types of things that we'll be focused on. And if we're focused on that, not only will pension money from Canada come in to the country, but monies from around the world will come into to Canada. Canada should be the most attractive jurisdiction in the world to invest in, and we're not. So the question is, why not? And my view is that if we want to force pensions to invest in Canada and distort the market, we're not addressing the root cause problem, which goes back to some of the things we talked about earlier in terms of productivity and having a friendly environment in which to deploy productive capital.
I mean, how would you characterize what other pension funds that are not based in Canada, how they perceive Canada right now, or what they've done with their investment dollars?
Well, first of all, a lot of them have invested in Canada, but let's be clear. When you see changes in taxation, when you see changes in regulation, when you see it very, very difficult to get approvals done, those types of things, when you see barriers to both capital and trade, all of those things discourage people from investing in Canada because A, they believe they won't make as large a risk-adjusted return as they can make elsewhere, and B, they believe there is a degree of unpredictability in terms of investing in this country. And so, to me, the answer can't be to force Canadians to invest at home in order to prop up the economy. All that does is distort the market. What we want to do is create an economy where Canadians and others want to invest in our country, not because they're regulated to do so.
So let me build on something that John McKenzie, who runs our main stock exchange, head of the TMX, which runs the TSX, said to us recently. He basically said, if we're going to, not necessarily put more resources towards investing in Canada, is there something that the pension funds can signal to our Canadian companies that would make them more willing to invest in a Canadian company versus another one?
Yeah, look, I think Canadian pension funds have been clear. They have great dialogue with Canadian companies. They're investors in the market. They're talking to Canadian companies all the time because they're looking for great places to invest. But the one thing I want to make very, very clear here is whose money this is. By and large, this is not government money. This is your money, and this is tens of millions of Canadians' hard-earned savings. This is money that comes out of your pocket every paycheck and out of your employer's pocket that is put aside for your future retirement. That's not tax money. That's not money that is being used for policy purposes. It should be used for a sole purpose, which is to secure your retirement security, my retirement security, and literally tens of millions of Canadians' retirement security. What we should be focused on is using that capital to have the best risk-adjusted returns. And one of the ways you get the best risk-adjusted returns is diversifying the portfolio across asset classes, across geographies. And we have to continue to do that because otherwise it's a hidden tax.
I do want to see, though, in light of all that, like, is there a particular area where there is common ground? You know, in some private conversations, people have said to me, energy infrastructure. Okay, you've got commitments from pension funds to, you know, a transition economy around the world.
Yeah.
You know, capital is needed for that. Canada needs capital for that. Is there common ground there?
There's more than some common ground. Okay. There's a lot of common ground.
Yeah.
There's a massive opportunity to invest in this country. There's a massive opportunity to invest in infrastructure, but then you need to have the conditions in place where the private market can make a sufficient return to justify the investment in that capital. I think the transition economy, and I've said this on this show before,
yes, you have,
is probably the single largest opportunity of a generation for investors. And a lot of that transition economy can happen here in this country. But then we need cogent regulation and predictability, and a sense of that we're going to make a return from investing in that economy. And sometimes we may need things like the infrastructure bank to crowd in private capital. Other jurisdictions do this all the time. They're doing it in the States with the IRA to crowd in private capital to help drive that energy transition. We can do all of that in this country. And not only if we do that, will Canadian pensions beat a path to our own door, the world will beat a path to Canada.
So just in wrapping things up, as you know, the former Bank of Canada Governor Stephen Poloz was essentially appointed by the federal government to noodle around a little bit more on this and maybe come to some concrete solutions. I mean, you talked about you'd like to see more tangible evidence around how we can make the country more productive. Is that where you'd like to see Mr. Poloz spend his time?
I do, and I think Governor Poloz understands this. I think I hope he will come out with recommendations that are going to try and find ways to crowd in all types of capital into the country, including Canadian pension capital. But don't mess, you know, with something that's world-renowned in terms of the way Canadian pensions are managed. Canadians have one of the best pension systems in the world. I will tell you, Canadians should be very concerned if governments of any stripe, are trying to intervene on how those pensions are invested, because today they're invested wisely and they're doing a great job in terms of providing financial security for all Canadians in their retirement.